All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for August 1st, 2023. Health update. I have my collaboration tomorrow or consultation with KU, Kansas University Medical Center. World class cardio guys there. I'm going to do as I'm told. Um, we're going to schedule valve replacement whenever they think it's best. So sooner is better than later. So, onward. Um, we'll start with, let's try share on the screen, dummy. All right, so we'll start with 30-minute swing. As soon as we get this rolling, come on now. Okay, so this is Alcoa, 30-minute. Friday, we initiated the COTA 2. You could also have called that an SSC if you were just looking from the peak to valley because you had lower lows. So I agree with you if you called it a COTA 2 because of that. I agree with you if you called it an SSC because of that. As long as you take the trade with standard risk and then take the gap down exit to lock in +3, I agree with whatever you want to call that. AI was a gift that kept giving, so I'm going to ask you how much you exit at this point as I narrate the trade. So it went from the previous 10-day and 30-day high. We got the short here on the PSAR flip, took the dragon exit the next day, Friday, took the COTA 2, standard risk. It closed very well, continued nicely. Today it gapped and then reversed sharply, added the emerging dragon, and added another one here. So now at this point, you're holding as this rolls over, as the rest of the market was really pretty bad. When you come over here and look at all of the things in the stack, there's only a handful of them that did any good. AI, Caterpillar, and Cliff. Intel was flat. Microsoft was flat. U.S. Steel had to get, but everything else was down at least 1%, sometimes two. So knowing that and having that in hand, how much do you get out here? You got three positions, and the first position is holding 6R. The second position is holding 2R, and the third position is holding 1R. So you're at +9 on three positions on the swing trade. The intraday trade on that was really good too, by the way. But you're holding +9 over 3 days. How much do you decide to get out? I'll tell you in a minute how much I get out. I exit 2/3. I just say that was the abnormal gift. On this one, I raise my stop to about here and lock in 8 or lock in 5 of the 6 on this one. I'm moving my stop to here, and I just take the intraday gift, which I have no reason to believe in. It's such a narrowly traded stock that I am, and at other times you've seen me add positions here with markets money, but it just, when I saw this and how much the market itself is rolling over, I don't want to, fight the tide. So I'm getting out there at the dragon exit. Greg's going to ask me, hey, when do you take the dragon exit? rather than respecting the PSAR. Whenever I think to ask that question, I take the dragon exit. Done. I know how to get back in. If it occurs to me, I vote towards lesser risk.
That is also known as feed the bulldog.
Yeah. Caterpillar, another nice one. This was a anomaly. This is one of the advantages of having a mild heart attack. You get to stay home. You don't have anything else to do, so you get a nice gap. Completely cleared, and it's going up like a scalded ape. So hold my nose. And now had the presence of mind at the 4-hour battle drill to add a second position. This rolls over. Dragon exit. So this one scores 7 plus 3. So that's 10R on a day when the market did this. You bet I have no overnight risk on that because I know how to get back in. New 30-day high today just obliterated all of the previous measures. So now if we look at this on a longer term time frame, since we're here, yeah, I'm smart enough to get out at an all-time high. Why would I do that? Because I know how to get back in. We'll see. You think Caterpillar's in play tomorrow? It certainly is. But when the market is doing this and starting to roll over a little bit, I'm ready to just pause and reflect. All right, back to our scheduled program here. This is Cliff Natural Resources, no trade. It's setting up a sideways quiet channel nicely. I'm getting ready for a nice breakout from there. CVS took the collapsing dragon short, holding about +1. Dish Network at the open on failure to follow through, I cashed 1. Devon Energy at the open, failure to follow through, cash 2. Missed the morning hook. That's all right. Electronic Arts, no trade. Emerging markets, boy, talk about nuts. This is one of those you just need to know that emerging markets, that ETF, behaves in this manner. Look at these gaps. So when you get a move like this, and you want to bet on a gap, which way do you want to bet? Why bet on the gap? I would rather see it on intraday where it does this, and I can cash it near the close and make bank on that, and then not have to worry about eating that kind of overnight move. Because the 16 hours or so that the market is not open is when EEM is getting all the news that pushes the price from the close to make a big gap. So EEM is much more often an intraday trade for me. Ethereum, no trade. Mexico, collapsing dragon entry short, standard risk. 3R battle drill, dragon exit for about 5R. No overnight risk. Brazil closed after the gap. So I thought I was smart because I had this one. And got the good gap, and then it just closed with a slight bump. Held that, and then the gap down erased all of it for basically a scratch. Easy come, easy go. Intel, scratch. No, it's still Brazil. I'm sorry. Oh, there's Intel. Yeah, Intel Initiated the Kata 2. It held support where you would expect. It had a nice gap here back in the day, and the low of the day was here. So it's holding right where you would expect to hold. Came through the dragon, PSAR flipped. So I'll take that on Intel. And it closed at a scratch, and I'm willing to hold that on speculation for tomorrow. IP, I just took the exit from Thursday's gap and go, and there was just no more follow through to the upside. That's setting up for a nice reversal. Oh, by the way, this was an amazing trade because it started way back here. So that's almost a 20R trade. So at the first sign of cutting and running, I'm pretty happy. That's in IP. That's that international. I couldn't wait to get out of that trade. IYR, no trade, setting up a Kata 2. Regional banks, no trade. If the market had shown any kind of strength today, I probably would have taken that as a SSC, but it's still there for tomorrow. Mattel, no trade, setting up an SQC nicely. McDonald's closed the yesterday's SSC. So this one started off well, gapped up, went all the way up here, and I got out just in time to preserve a fraction and avoid all this. I also missed that trade, but I was happier just to avoid the pain. Merck. Yeah, so this was a weird one. Yesterday we took the Kata 2. We had a scratch and then the Kata 2 held. So we entered, it closed pretty well. And then today it just did this, ran all the way up here and finally had the presence of mind to exit there after a 1, 2, 3, about +3, and gave back 2R, just hypnotized by the size of that move. Missed the follow through on the short side, which was about a 3R trade, but I was happy to get out of that with my skin. Microsoft, yesterday's Kata 2 maintained. I like the fact that it held when the rest of the market was bad. So if we take a look at, we sort this by the stack, Microsoft was actually in the 4th position. And when I compare it to the other things in my normal tradables, you got the S&P right here, Intel, Nvidia, McDonald's, Treasuries, Tesla, Ethereum. That actually looks like pretty good performance. So this was one I was willing to hold that had this little no lose plus dinner for 2. I'd like to see it get above those 2 levels. If it gets above 340, I'll add a second position because this is the AI champion, and we'll see. Marijuana, again, couldn't wait to get out of that trade. It rolled over, PSAR flipped. That's about 1, 2, 3, 4, 5, 6. That's about 7. Nvidia. I like the strength of this long PSAR. It kind of shook off this little dip and held pretty strong all the way through here. But I looked at this and said, given the weakness of the market that I just alluded to, let's just treat that as a 0 state and buy the breakout or sell the breakout in either direction. That's going to be a high priority for tomorrow. That's also a clear winner in the AI space. PBW, Got the second position in yesterday, was able to minimize the loss on it. The first position paid for it. Happy to get out of it. Scratched Rivian. You can see the rollover here, whoops, in the S&P. This is how I am interpreting this price action. You don't see this all that often, but you have, within the last 5 days, you have two really extreme moves from 451 to 460, which is, a full percentage. No, 2%, sorry. That's a 2% move from bottom to top. And it did it once, twice, three times. And now it's compressing into this tight little triangle looking thing. Now, the strength of this move from here, the gap and then the go and the maintenance of all that. So the PSAR starts here when it flips. And now it's giving it this much time to make a follow-through move, which it does not do. So that means that this whole sideways chop, this sideways move, has now closed in with the PSAR. And in fact, the PSAR flipped. And now the downward trend is indicated by the PSAR is this. However, today, the dragon held right here and the RL10 held right here. Both of those were opportunities for this to fail back to here, which it did not do. And in fact, it gave you a little bit of a little nice bump into the close. And the net result of that is today is a perfect critical state where you have a range compression, you have a zero state, you have the price, the actual closing price was right in the middle of the day. So now you have an equal amount of space to go in either direction to break out from the low of the day or the high of the day. So that is as perfect a critical state sideways fence sitter sniper as you could possibly want. So where can you get short on this thing? The most aggressive play would be at the base of the dragon at about 456, or the bottom of the RL10, or the low of the day. Any one of those three triggers is legit. Where could you get long? You could get long at the PSAR break or the high of the day, which also coincides with the dragon. And your third entry would be, at the RL10, not later than this peak here. So what you have, in my view, is this very tight yellow zone inside here. Which is a perfect zero state. And if you just take today's price as the midpoint of that line, you could make your risk box a half of that. And then if this starts failing this way, you could quickly get 1, 2, 3 positions in just off the 30-minute chart, or 1, 2, 3 positions, a fourth position, a fifth position, a sixth position. That's what is implied in the range compression that you see. And what's really important about this is the interpretation of the PSAR. This move off this surprise crush is telling you, hey, you got a nice move going. You've got 1, 2, 3 efforts to get long for it to follow through, and it did not. It got to here, and then it broke, and that's why the PSAR flipped. But then when the downward trend is here, and it does not break, that's what sets up this perfect moment of indecision. Because everybody looks at this chart on the longer term and says, this is really a strong market, and it was a small range day today. There's nothing to see here, so don't worry about it. That's everybody that wants it to go higher that's already invested from earlier. But I look at this as a tactical trader and say, I have the perfect opportunity tomorrow to be ready to go hard in either direction and follow the market and then follow the leaderships. Now, who could be candidates for strength tomorrow? You're not allowed to be surprised if Microsoft does well or US Steel does well or God forbid Caterpillar. That may be the key tell right there is that if there's a lot of buying pressure in Caterpillar, that contributes to the Dow and to the S&P a certain amount. But that just might be the catalyst for more. So we'll see. The only issue on Caterpillar is it was so strong that there might be some profit takers early. Except, it's at an all-time high. I think you got to love Caterpillar. So what I wanted to point out was how much information you can gather and infer on the basis of what the PSAR is doing, and notice how it is setting up between the belly of the RL10 and the peak of the RL10, this really tight range, and how you got to learn to spot critical states. Critical states are really defined as anything really could happen, and if it does happen, it could be large, very fast, in either direction. And there's no compelling reason to have a directional bias. Well, I should have a long side bias because the market's been so strong. Yeah, but it's had 5 days where it hasn't done anything. So that's a perfect recipe for a natural rollover. Yeah, this thing could really collapse and fail. Yeah, except it had 4 days where it didn't. And when it did collapse, the buyers came right back in. So there's no compelling evidence to have a strong directional bias, which is what makes this a perfect zero state. So that's the lesson I want to share with you today. Treasuries missed the gap and drop. Tesla. Um, oops. Yeah, Tesla. Failure to follow through. I missed this. I missed the sell off, but I didn't get the short, but I did cash a no lose. And then the U.S. steel trade we closed yesterday, and nothing has happened since then. This also feels like one, even though it didn't fail today, this feels like it is stalled at this standard price level right here, 25 and a quarter. And what I can see are these compelling moves to the downside. Because remember, most of that move happened after one, two big bursts, and then no more follow through. So to me, this is vulnerable to the downside. Yeah, that probably moves interest rates around, but no thoughts other than that. Um, the guys that are making moves on that already knew that was going to happen. It was long term priced in. The official announcement is never needed by anybody that's actually professional in that space. So it could push the treasuries around, and you probably saw some of that happen in here on the treasury. But most of that price action happened in the overnight session when news was probably leaked. So that's just a warning shot at the U.S. as part of the geopolitics more than anything, and an effort to squeeze a little more interest payments out of the U.S. for all the owners of foreign debt. I mean, our debt held by foreign nations. A little squeeze play on the U.S. All right, so that's everything on the hybrid swing.
Hey Ken, could you take a look at AI? You were making the case for Caterpillar,
Yeah.
but AI, if we look at it on the 9 day,
Oh, sure.
I have it back at 40.55. Okay, and I never got out because it didn't violate my risk box.
Yep. Oh, this is as strong a 9 day chart as you could ever want.
Yeah.
Nothing wrong with that.
So
But my the position size I had on that was very large
yeah,
intraday, and so when I wanted to get rid of I had extra swing trades on it from today. I had
Yep.
extra intraday trades on it today,
Yep.
and my position size, that was a much larger portion of my portfolio than I wanted. And what I saw was this on the 3 minute.
Yeah. Yeah.
If I was going to sniper trade of the day, there was an entry here and an entry here, plus a swing from before. Those are the
Right.
swing entries. And I had like four intraday positions on this, and
Yep.
it was doing this. And I said, you know what? I'm getting rid of all of that and just putting that in the bank.
Yep.
And I've got the long term swing on it, and I love it for that reason. But I wanted to raise capital because if there's the start of a bloodbath in the S&P, then it has a tendency to pull everything down with it.
Yep.
And there's a lot of people that want to preserve some nice gains in AI. So like
Yep.
this is actually not a bad move in AI from right here, from
Oh yeah.
30. I mean from 30 to 44 in the last month,
Yeah.
and it's right at a place where it has stalled before. So I look at that as an opportunity to cash some extra gains. But I like the swing from
Yep.
in here. The swing
Yeah.
from inside here is
If it
good.
gives above 45.28, which is the local high,
Yeah, if it
uh,
gets above here, that thing is free and clear because it's right at the logical
yep.
it's right at the logical break point. So I'll keep one position. I
Yep.
ended up having about 10 times the position size on it as it was going into the close. And I said, you know what? I know how to
Time to get
get
out.
back in, and I
Yep.
can put those right back on. And it doesn't really blow up until it gets above here. So
Right.
this is still a tactical trade in my view.
Yep. So
Uh,
for me, the 2 hour battle drill is going to be at $50.60. Okay.
yeah,
On the 9 day.
yep.
And there's a new stock that I'm looking at, which goes in with AI. That's called Sound, SOUN. And that's really interesting to me because it's only about $2, 2.43.
Well, this is the place where, when you're thinking about the 9 day and you have seen
Yeah.
this was after the lockup expired and people cashed out their positions at pennies, pennies on the dollar from what they paid for.
Yep.
And then the first surge gets you to here, and then the profit
The,
taking to here. Now, as long as this is still in support,
yeah. The lows are getting big.
your risk box is only right there.
Right.
And you still have a reason to believe that it could make that move before it even gets abnormal. And then, so
Right.
what you want to do is make sure that you have an auto buy in here above five, about 5.25. So if it does clear those two resistance levels, it surprises you into that trade. And then you can trade this distance from 240 to 5, which is a 100% move. You can trade that as pure tactical play, not on a 9 day, but you could then go down, to a 3 day. Um,
Yeah, I like this.
and yeah,
It's a 6 cent risk box.
yeah,
So right now it's at a doji on the 30-minute chart
and is
right
already
now.
and it is already so with about
Six
you
cents.
could on the entry. So on the 3 day, it's a 40 cent risk box. So you could
Yeah,
even just automatically buy it with a 40 cent risk, which is
and
still
go.
a 15% stop.
Yep.
And why not? It
So
held
just
support here.
you know,
So
it's something
yeah,
and if it gets above 248, it can go.
yeah,
Because it's a natural if you
yeah,
zoom out on the
yeah.
30-minute chart.
This is the price where it collapsed. So
Yep. But
so it returned to
zoom out
here.
even further.
That gives you a 2 to 1 with that gives you an 80 cent gain to here. So it's justified on that level. And there's your 4 to 1 gain on a 40 cent risk. So that works. Now, if we go to the 30-minute,
Yeah. And if you look back to May, right?
where are we at
Keep
here?
going. Keep going. Keep zooming. Keep zooming. Okay. Getting there. There you go. So right at May 15, right?
Yeah, right there.
Yeah, right there. You see what I'm seeing?
Yeah. So
So
this
it
is
can,
a this is a logical support
yeah,
level that if it was going to go to zero, it
it would
would,
have.
but it hasn't. So you just set that box up there, and that's the 40. That's about a 40-cent risk box
Yep.
right there. So
Yep.
the reward is pretty clear. That's a if we were to look at this as a we'd see that as a Godzilla on 30 minute.
Yep. So just like to share this with folks because it is kind of going hand. It goes hand in hand with the AI stock. So uh, it's one that I like. Uh, your mileage may vary. Your risk is your own, but something I'm watching.
Okay, so back to the
Anyway,
sniper trade of the day. So
thanks.
this is Microsoft on a 3-day chart. Let me get my gizmo out of the way here. There we go. So you could be short on the PSAR flip. And you made about half an hour when it exited. Notice that the weakness induced. There was enough persistent weakness in the form of that slow slide that the very favorable MACD, and we're using Trader X's and Bill's numbers on this, came all the way through the river, bottomed out, and started to hook back up, which was enough reason to get out. Whoops, to get out there. Now what we have is a COTA 2. This is what Trader X and Bill are looking at.
Yep.
Just a minute. So you have this crossing the zero line into the summer, PSAR flip, standard risk. COTA 2 on the MACD twice. When the when this rolls over, so all of this move here, as it's gathering steam, all of that is north and west of the river. So it's in the growth floodplain. All of that is good. Here's where it re-enters the river. It tells you that the abnormal move is over. It doesn't mean it's going to fail. Like it took 10 days to fail. But the period of abnormal growth, the optimal growing season, is over. Well, what that meant was on about a $20 risk, that first position earned one, two, three and a half. The second position earned one, two, and the third position earned one and a half. So total up about 7R in Microsoft, when it was not clear from the daily chart that was an easy long-term play. So this is a case where when we get those shift, those seasonal changes at the bottom of the river, and a failure to fail further, and a reversal, exit, confirmed entry, and then reinforcing success, and then respecting the changing of the season. That's the lesson to learn from that one. Okay, that's the sniper trade of the day. All right, we'll check the traders here. All right, this is Brian. He's wondering if he's making it harder than it needs to be. Well, this is supposed to fail right away. It does not, so you get out of it with a snip. Free chicken. This is supposed to fail right away. It did, and then reverse sharply. So you say, maybe that's a head fake, so you get paid. You get a collapsing dragon. It's supposed to fail, but it doesn't, so you take a micro scratch. You get another piece. You get a nice pay. You get a re-entry and a nice pay and a scratch, and you come out of there with 2.09. Was that hard? No, it was absolutely correct. I'll tell you what's hard is laying sod for a living or carrying bricks for a mason to go build a wall. That's hard. This is not hard. This is just following rules. That's not letting me size the screen. Sorry. All right, Rad brings in, he gets paid, gives back a little bit for a micro loss on the yen, gets paid nicely. Missed the two big moves of the day, but still gets paid nicely for over 2R on more on the yen. The 5-year T-bill, the re-entry. Oh, key to sanity. You've gotta respect that move when it gives you a collapsing dragon after a PSAR flip, and that's actually like a double collapsing dragon. Hamad getting paid to grind, much more relaxed, getting paid in pieces. Doesn't take the OR3, doesn't take the collapsing dragon, takes the second one, gets paid. So 0.8, they probably left 5R on the table, but still positive expectancy, gets paid in measured chunks. Gets paid in, let's see, in Microsoft. No, this was a micro loss in Microsoft. I think this second entry was slow to enter. We should have been in down here. That would have made the difference in the day. Waiting too long on this one. This is supposed to fail right away. When it doesn't, get out. Paid nicely in NVIDIA. This one is supposed to fail. It doesn't, so he stops and reverses. The OR3, this could have been a huge day in NVIDIA. Tesla, a little bit of chopping around, but it comes out net positive. We'll take that. It just didn't have much of a directional move. Now on Greg's here, let's see what we got. Um,
Yep. Okay.
just a minute. This feels like an
Hey, Greg,
OR.
where you see that MLR10 crossing that, uh, I'm sorry, later on in trade number one?
So there are two. There were three possible entries that I'm seeing in here. One is this. This open that runs all the way up rejects the Bollinger Band, comes back. There's a potential for a short. The PSAR flip is here. The collapsing dragon either here or here. That's the second collapsing dragon. Any one of those four uh, allows you to get that piece. Here's your slightly improved entry. And now your question was trust the PSAR or the dragon exit. I trust the PSAR for the entry. The PSAR exit is my exit of last resort. But if I've got a winning trade in, and then it gives me a 1, 2, 3, and I take the dragon exit, I, I'll take that. I want to err on the side of getting out too early.
Yep.
So, if you look at the move, looks like this, and um, the PSAR. Let me draw the dragon in here. Just so you can see it. The PSAR always, after a nice big move down, the PSAR is always north of the dragon. So when you wait for price uh, to cross, you're getting a little bit of confirmation that you get this. But instead of, uh, now that I've got money in hand, I can either get out here or I can get out later down here. I'd rather have that in my favor, especially because I gave up a little bit over on this side. Like I could have gotten a 1, 2, 3 entry here, but I elected to wait for the additional confirmation after a strong downward move. So I get that confirmation. But now I want to be more aggressive on locking in gains. And this has to go back and listen to my discussion of what is your average win, what's your average +1, and the more important thing is don't let an abnormally good trade come all the way back to average or worse below average. But if I'm at average +1 standard deviation, I'll take the dragon exit every time because I know how to re-enter. And once I've exited, I'm now in a position to be in a zero state to think about the short. Whereas if I take the exit here, I'm emotionally committed to, I'm still in my winning trade and I just got out and I've got some emotional valence to process. Or I can just get out earlier, preserve that move, and be ready to short it if that's what the market calls for. Mullen asks, this is why not do both partial and exit and a drag? Yeah, that's essentially the Wu-Wei exit, is when you have an aggressive exit and a conservative exit. If you take half and half, you end up splitting the difference. This is your sniper. This is your manager. The Wu-Wei exit means you don't even have to think about it. You take half and half, and you average getting the median. And now you have zero cognitive effort asking the question, when should I trust the PSAR? When should I trust the dragon exit? Once you get above average plus one standard deviation, by definition, you are into abnormal gains, and you really want to preserve more of the abnormal gains. And that's where you hang a risk box off the top, or you take it at the edge of the dragon. Don't wait for the PSAR. So I will reinforce that guidance to you again. Okay. All right, that's everything I got for tonight. I'll get the reports ready to print in the background, and I'll get posted. I'll post you guys on.
Hey, Greg, I have 30 seconds
Go
for you.
ahead.
In my class, I would have taught you right where you were talking about the dragon exit, Ken, the second black candle there. So you had
Where am I?
gray, gray, black, gray, black, gray,
Here's
black, and then
my.
you
Where there's my mouse. Where am I? Where do you
go
want
up
me
to
to go?
the apex of that whole thing. No, up to the can't be there. That two candles over right there, where that blue line crosses.
Yeah, blue line crosses the 3 period.
Right. But I want you to recognize, Greg, that that's 15 minutes. You looked at that thing waffling around outside of the river. Time to get out. Just
And
cut
here's
it.
the last time it was at that price level.
Yep.
It did
And it
not
failed.
follow through, and it failed large.
Yeah.
And the size of this failure is the size of that
Yeah.
failure.
So that's why I want you to consider, because that's 15 minutes of watching that thing do that. Just get out, because
Right here.
if
That's
it
a one
continues
two
on,
three.
it's going to go.
That's
Yeah,
a
it's
one
a
two
1, 2,
three
3.
actually.
There's a bunch of things going on there.
It's also
If
the
it
skin of the
fails,
dragon. Yeah.
you want to be ready to be able to get into the collapse, right? Before the piece art, you want to be ready for that.
Yeah, and I
Okay.
also want you to. I just want to, right here. You got
Yep.
two dojis, another little doji, a 1 2 3 entry, a PSAR flip. It's crossed the dragon. You've got a kata 2. You've got to get in here and
Yeah.
not at the emerging dragon. We gave back that much,
Yep.
which is about zero point 0.6, which is probably your average win.
Yep.
Waiting for the certainty.
And not to beat on you, but that, if this is what you're watching, that
Now this
was
was
that
fine.
was that
The
was 30
same
minutes. Yeah.
the same
Yep.
logic there was good because it
Yep.
failed right where it failed before.
Yep. Yep. Yep.
When it comes up to that channel and then does not blast through, done.
Yep.
Reset.
Just a little nuance for you.
Ring the bell, make the bank.
Feed the bulldog.
Yeah. All right. That's all we got, fellas.
Ciao for now, folks.